Okay, so we know how to choose stocks. We're back again, and thank you. We have some followers. If you want to click in or type in comments, more information you'd like to know about this type of investment, let's look at this. This is today, and today is actually our time because some of you are international. Today is 9/14, 2023. So if we look at what our values are, um, 9/14, 2023, and these are actually the stocks we had. Okay, um, the market value is what's going on in the market right now because the stock is constantly dropping or going up, and the account value is actually what the total amount of stocks that are in there. And again, this is a very small amount. Well, small amount for some, large for others, but it's a small amount compared to some people invest 1 million in stocks a year. Some people invest 10,000. Some people invest 25,000 for something that is speculative or is not guaranteed. I'm going to put that here. This is really not a lot of money to lose or necessarily to win. And again, the objective is to make sure that this amount goes up. So if this amount slowly but surely goes up to 6,000, because it's only about $492 away, and then we can get it to go up from here to like 800. And remember, I'm being realistic because that's what we wanted to do if we don't put more money into it. And then, and like I said, this is what the total amount would be. So it'd be 5,006, slowly but surely, and then 5,800. And then from here, you're only $200 away from 6,000. So maybe if you can see what this share is, you can actually start making your money go up. And this is a real stock. So anyway, this happened based on, so today you have $95 in losses, $95.60. You can go ahead and round up to 96. You have though some gains of 69. So you have an amount that went up and you have an amount here that went down. So realistically, if you think about it, this amount is only really about a couple of dollars less. So 95.59 minus 69.25, it's only $26.34 really of a loss because the amount gained is more in general. I know you don't see that because you're not looking at the whole portfolio, and we're going to go into a piece of it later. This whole amount compared to this amount here of 69, they're balancing each other out. So when you subtract $95.59 from $69.25, really your loss, and I'm going to make a negative sign here, this is your loss in reality. That's not a lot. Think about how many times we go to get coffee, how many times we, do something with entertainment and just throw that away. So if you're doing it to make yourself wealthier, that's really not so bad. So when we look at this, here's two shares, and I'm going to go ahead and put that it is an entertainment stock because I cannot quote which one it is. Okay, it's an entertainment stock. There's only two shares. And why? Because each share at one time cost $86.64. And now because there are two shares, they went up 4 cents. Okay, there's a $2.25 gain, which over a period of time, and today was a $4.06 gain. Because 225 times 2 gives you this amount, times 2 gives you My zero's off. I'm sorry, guys. But anyway, I just want you to get the foundation. I don't really have to do the math, but I'm going to do it anyway. And I want you to go ahead and look at what is really going on here. So you have 0, here's 1, here's 5. It's really more like $4.50, which you see here. Okay, and what is that $4.06? That is balancing out your loss. So this is your gain over here minus your day-to-day loss. And that was added in that part you saw on the other page. Okay, but even this is staying positive. And do you want to know why? Because this particular entertainment stock goes up. And if anyone wants to go and look at all the common things we do, we watch, we see, and see what stock it is, you can kind of figure it out on your own. But due to disclosure laws, I can't tell you which one it is. But if you looked up what this price was on today's date, which again is 9/14, then you kind of find out what stock it is, and you kind of measure it and see what it's doing. And when we looked at this stock, we looked at what has it done over the last 10-year periods, what has it done over the last 5 years, and it seemed like a pretty good pick. And so it's $4.50 of a gain total, but then there's a loss that it may have taken a couple of days ago. But if you look at that, that's really only a 44-cent loss, which would be a 22-cent loss. So this might be safe for people who don't want to waste a lot and don't have a lot of money to waste. And it's really not, it's certainly not a Bitcoin stock, but it is something. So the total loss was only 44 cents per share. And that's not a lot of money. It's not bad, is it? 44 cents. So this is what you want to look at. This is the account value over here. And this kind of stays there, and this amount is either going to go up or down, and we want this to go up over the next few days. And if it's going up at $2.25, this amount maybe by next week sometime might hopefully change to about $175 or $180, which is what we want to do. But because the market has been very volatile, and it was volatile last week, we don't know. But that's what we're trying to do. Okay? So now, when you look at the overall amount of what happened, and this is today because 2 days ago we looked at it, and none of these were green. All of these are green. Here are your reds. These mean there are more losses over here. And these are small amounts. So of course we're going to leave this stock here. Okay, this was the one I just talked to you about. This was the I'm going to put ENT, entertainment stock. And this stock over here is an oil stock. And I mean oil like you put in the car. And that's all we can say about that. And it's been pretty stable. 57 cents is not a lot. But this 57 cents, again, this gain, we want to go up to 61. You want to see it go up gradually to 63. You want to see it go up as much as possible. Okay, these D's represent dividends amounts. I think this one was only 16 cents. Because, think about it. Not $16, guys. $16, you would see this total value go up. Because it would have been added to, and it would have been $16 at 6 shares. Okay, and that's not what happened. It was 16 cents total. So some people out there are going, well, that's not a lot of money. Big deal. What's that? Who's going to do? Well, again, we want this to go up as much as possible. 18 cents times 6, 20 cents times 6, $1.20 shares. And remember, you only paid $17.63 for it. So, you haven't done so badly. And again, this stock isn't that high. It's not a penny stock because it's not under $5. It's not even under $10 like these. And This one is very much a penny stock. It's $1.28. And this one is a big stock. This seems to be going up. It brought you some money, but you had to put almost that amount in. And it only went up $3.62. So it costs more and it's not going up as much. And this one costs a little less. And if you were to do a ratio of like 223 to 362, and we can put the cents in, but really this is what these numbers are racially, racial wise, not racially, but racial wise. Like really, it's proportionately. When you look at it, it's like 66%, because remember 2/3 equals 66%. So a smaller amount of stocks, smaller cost amount of stocks are going up right here, as compared to here. It was 366. And it's going up less, comparatively speaking, at 366. Oh wow, to the $2.23 gain, which was over here. So in reality, you might be better off if you were to buy a smaller cost stock. But you have to do your research and figure out which one this is. You might be able to get more shares, and it's just 66% less. It's not a lot, and you can see the amounts that are concerned here. Your total gains, $18.10, $4.47. Maybe you're getting a little bit more, and keep in mind, we have more stocks over here at a higher cost. So average that in. There are only 2 here, 5 here. So that ratio is 2 to 5. So that's like 60% more, because this is 2 to 4 as a half. So your ratio is just a little bit less, and it costs you more. Those are decisions you want to make, though, because over a period of time, this should spread up. And the reason I say should is because no one knows what tomorrow holds. No one knows what's going to happen. And so we cannot just sit here and pretend that, well, it did it yesterday, so it's going to. It did it last year, so it's going to. All of this, every single one of these is speculative, and every last one of them can plummet or drop completely, and then you have nothing. So when you're looking at this, you have to think that through. And you have to look at this page that overall, most of these have gains. Here are your 2 outliers. They're the ones that have losses. Otherwise, the rest of these had daily gains. And here's where it shows up. The reason you have losses over here is because this is over a period of time. This is over a period of time. This is only $2.97. So that's not a big deal. This is $163.09. Some people are saying, hey, that's the amount of my insurance. That's my gas, water bill. That's some money. But look, there are 12,050 stocks over here. So if you look at what they cost, it's over. And here's another thing. Why didn't we dump this when it was 0? Because by the time we pay the commission fee, we're not breaking even. So we want to keep a look at this stock next time you're there and see what we did, because right now we get paid nothing for it, because there's basically like no change whatsoever. So you'd just be dumping it to dump it. And it's 12,005 at this isn't 3 cents. This is at a fraction of 3 cents. So that's your biggest loss. And it was a penny stock. Okay? So it's a penny stock. And this is a good reason a lot of people say they don't like penny stocks, because you take more of a loss here, but it also costs you less. So you have to weigh and evaluate that. This here, only $2.97, $5.08. It's right now, market is at $20.04, but you have $60 over here. So for a $5 loss, not too bad. This is a $16.35 gain, or market amount, not a gain, market amount for a 297 loss. $2.52 loss for 105.78 gain, $4.07 for a $205.70 gain, and here's one of the biggest ones. It's a little bit over $10, $4.28, $4.03 is a gain, so that's a plus, and then you still have your market value. Here's a loss here, $71.40. This might be one you want to question and not think about this is, and we will certainly question. And this one is only $3.19 loss, and here's $109.80. This here, $27.70, and you only have $25. This might be something we need to think about. And this is our gain, $106.91. You have $1,374 there. So this is what you call a keeper, at least for now, unless the market completely crashes. And that's something we have to pay attention to. And this here, $11.82 gain, and $118.33. Keeper, there's only one share. Might also be something we want to invest in. I'd have to look at whichever stock that is today, because at one share, you might not be taking such a loss if you were to buy another one. And especially if you were on this trading platform and you did it for, and you could do it for free and it's not costing you anything. Some trading platforms right now are letting people do like about 20 shares, per month or whatever, and they're not really charging because they want to build the platform. That's up to you to do some research and find out which ones they are. And some of these we really want to pay special attention to and look at, and make sure when you're analyzing, you're thinking about like what's really happening. And you'll get a chart that'll say up, down, it'll go like this. It'll say, okay, this is it, and it stayed like this, and it went to this very volatile here, then up, and then straight, and then this. Okay, and then this is it for 5 years. It'll go 5 YR. And that means that there was really not any change. There wasn't a significant drop. And then it'll go like this. It'll be like this for like 2 months. They might say 24 months. And then all of a sudden it just dropped. Highly volatile. And no movement over the last 5 years. And it's going to these drops and these peaks. So up to you to decide how much you want to. We call those roller coaster rides. How far you want to drive them, because the stock is so volatile that may not be worth your while to invest in it. Anyway, we appreciate you for watching. Thank you so much. If there's anything you'd like to know other than the names of those particular stocks, please go ahead and give it. Okay, once again, this is disclosure. We do not suggest that you take all of the advice as any evidence that you will make money in the stock market. We do not use all of the information on the next page to make all of our decisions. Some of it is on ours, and our decision is based on what they call suitability. And are you able to take a risk? And there's some people in this building that can take those small risks, $5,000, $6,000 total in stock. Not everybody can. So you have to look and see what your risk is and what your risk tolerance is. And remember, some of those stocks I gave you, like the entertainment stock, you may be able to buy 1 share, you may be able to buy 2 shares, and then that's your total portfolio. That's fine. Okay. But, a lot of us do this. And the information we did give on this stock, it is accurate. Okay. And it pertained to us. And keep in mind that portfolio has been around at least for a year. Okay. And we can't guarantee market prices. Okay? And I'm going to put this in here. No guarantee of market prices. And when you get ready to trade on these platforms, they'll make you sign a disclosure that you read, and you understand that there is no guarantee of any of what I showed you, that it may change and that market may drop tomorrow. Okay? So let's do this right here real quick before anybody calls. And remember, this is on the United States. It's called US, and this is based on NASDAQ. Look that up. I'm not even supposed to give that out. So we go ahead and put it up in this. It's based on their stock market quotes and prices. That's what they're looking at. But it's based on stocks that are listed on that stock exchange. So anyway, so thanks for watching us. We know how to choose stocks. Most of the time we do pretty well. Any questions, we're at Jacovitz Learning, jacovitzlearning@gmail.com, or kjacovitz@jacovitzlearning. Thank you. Have a great day.